What's going on, guys? Welcome back to another video of price action trading. When we are day trading S&P 500 2000 tick chart, we're using 2000 tick chart because it is the most similar chart to 5-minute chart or potentially 3-minute chart, but we use tick charts because they give us a little bit more details. Now we're going to be day trading using price action, and that means there are no indicators. We're not going to rely on RSI, Elliott waves, stochastic, none of that stuff. We're solely relying on our chart reading skills of the naked chart. There is the one indicator we are using, and it is 21 bar EMA, but we use it only as a supportive indicator. Right now the market is in pre-market session, and you can see the lackluster price action is happening. The vibe is very range, like you can see prices are swinging up and down. So the first thing that I like to do as a day trader is I like to identify the current market structure. And right now what I'm looking at is I see the resistance and I see the support, and prices are undulating up and down between these two major lines. But the day seems kind of uneventful so far, but it is a little bit early still. But nevertheless, we still, as a day traders, we need to learn how to trade even the range days that are, low volatility. So it's not just going to be long trend days. And also the other thing that we need to do is we need to draw the shorter term trend lines, because there's a trend line rule in price action trading that is telling us that after a break of a trend line, there's most likely going to be a retest of a new extreme. So I like to draw my short-term trend lines something like this, and this is a clear indication that we are in a trading range because we are just swinging up and down. You can see the trend line working up higher, we have a break, new high. You can see trend line working up lower, we have a break, attempt to make a new low. We're working up higher, we have a break and a new high. And the last trend line, we have a trend line working up lower right here. We have a little bit of break and potentially a new low. It's not really unsure. I'm not really that certain that this is a new low, but we'll see. Nevertheless, the prices are swinging up and down, and the way we trade trading ranges is we sell the highs and we buy the lows, or we fade the breakout, the most likely. Alright, so I have entered my first trade right now today, and I'm going to explain you guys what I'm looking at. Basically, we're coming off the lows, and you can see I draw the short-term trend line working up higher, and we have a first break of this trend line. So I'm looking at to make a new high of this current trend line working up higher. And notice this is the new low right here. Pull back, first entry short, pull back, second entry short that failed, nice bullish reversal bar, and it is off the EMA. The EMA is holding prices. So right now I have entered here, put my limit order in place, we're in trade, and I'm looking just to scalp here. I'm not going to be holding any runners today because it is very range-like, and the chances of me catching a big runner are very slim. So I'm going to just be holding a runner, and I'm going to put my stop loss one tick below this signal bar. But so far right here, you can see the prices were really not doing much. We just creep alongside of the EMA. The prices are and we got stopped out. Alright, so I started with the first loser for the day. Looking back at this, you can see the EMA is a little bit in the middle of those bars. We're kind of stacking up, but I still think we might get a new high of this trend line working up higher. Nevertheless, that was a quick trade. I'll pause the video and let you guys see the next setup. Alright, so you can see that the prices have made a new high right here. So this bullish trend right now is over with the shorter term trend line because we have a break and a new high. And I was just a little bit too early, but looking back at this, the prices are definitely starting to look a little bit more congestive, and it looks like a small congestion. And definitely after I have entered, the prices are looking very congestive like. So you definitely want to stay away from this. This is a no man's land, this is a no trade zone, because the EMA is perfectly in the middle of those bars. We are going sideways, a lot of stims, a lot of bars stacked next to each other. And I was just a little bit anxious to take a trade already because this really nothing much was happening here for an hour and a half. So I was waiting to take a trade, but I still think it was a good trade because I was still looking for a new high, and the EMA is holding prices quite nicely, but it is in the middle of trading range, and it's always more dangerous to trade in the middle of trading range. It's always better to buy the lows and sell the highs. So right now we have a break and a new high. If we get to the highs, like here, to the resistance, I'm going to be selling the resistance now. There is a much higher probability setup, and I'm gonna probably wait for some failed break higher or something like that if we get that. So this is, but right now, you know, definitely trading range, definitely low volatility, and we'll see. All right, and it looks like market may give us a chance to go short here. Depends how this bar will finish. If this bar finishes with a good bearish body, I'm gonna put my limit order and I'm gonna trade this failed break higher, because you can see we have a break and a new high. We made a one push higher. This is 2 legs to a new high, and we are finding resistance at the top, but we broke higher, we broke the resistance, and this is a failed breakout, and most breakouts of trading ranges will fail. And there's 11 ticks. I'm going to take this. I would like if we closed a little bit lower. You know, I would like to see a little bit fuller bearish body, but nevertheless, it is a failed breakout, and if you break one tick lower below this bar, this is when we will trigger, because this bar is way too bullish. We cannot go short below this bar. This is way too bullish. Our entry bar is a lot more bearish, and this is what I'm looking for, because when I'm going short, obviously I want to as bearish of a bar as possible. I want to see that a lot of people have the same idea as me when I'm trading. So this is why I waited for the bearish bar and not the bullish bar. We broke the bearish bar. I'm gonna place my limit order one tick back, because there's quite some stim, so I want a few more ticks to spare, but hopefully you guys can see why am I taking this trade, because this is a failed break higher, and most breakouts of trading ranges will fail. And why will they fail? Because I'm gonna put my stop loss once again one tick above the signal bar, and you have to put it above the entire swing. And the why most breakouts are failing of trading ranges, well, because imagine if you're a big hedge fund manager and you're holding a big gigantic long position. In order for you to get out of this position, you need to sell. So you're looking to sell the market, but as you're selling your gigantic position, you are making incrementally your average price lower and lower and lower, and thus losing profits. And this is what they don't want to do this. What they do is they will buy market just a little bit, they will rally the market just a little bit to trigger all of these buy stops, because all these people that went short here, here, and here, they're probably having their stop loss one tick or few ticks above this resistance. So the hedge fund manager, he will drive the prices up just a little bit. It will still be profitable for him. He will trigger all the stop losses, and they will buy back their position, and he is selling the position. So he is looking to take the other sides of their orders, and this is what should take the market and should push the market lower. Is basically him taking all the profits right here. And also there are people like me that are using this hedge fund manager strategy, and that I'm shorting with him. So this is what I'm basically looking at. I'm looking for the institutions dumping all their huge profits right here at the top at failed breakouts. And these failed breakouts, they happen on all time frames, on all markets, in all markets. You know, it happens over and over again. This is why technical analysis works over and over again. But right now the market is quite slow, so I'm gonna pause it a little bit and let you guys see how the trade is developing. And you can see market is starting to move in our favor. It went up a little bit, and I was a little bit afraid, but nevertheless the most breakouts will fail so often that I still kept my stop loss one tick above this my entire swing. And you can see prices are now working lower, and now we have notice this new high. We have a pullback, first entry, pullback, second entry long that failed. It is almost very tempting to take another position here, to open another sell position here. I don't like adding on that much, but if you didn't enter on this failed break higher, you definitely with the failed second entry long, because there's a second entry long and people are going long at the resistance. They don't know what they're doing. So this is where you have to go short. If you didn't went short here, you have to go short here, because this is a lower high and a failed second entry long. And you can see prices are slowly starting to move to my 10 tick scalp. It is even 10 ticks. It's looking like it's a little bit more. Yeah, it's good. It is 10 ticks. Okay. All right, so we're 1 tick away from our order, or most likely 2 ticks. The prices will probably have to dig through the order. You can see we're bouncing off the order and we tick through. Okay, perfect. So hopefully you guys can see why the failed second entry, why the failed breakouts are so powerful in trading ranges. This is the best way you trade trading ranges. You buy the lows and you sell the highs. I get a little bit angsty here and I jumped the gun too early. I don't know, you definitely want to stay away from trading in the middle. If you're a beginner, just stay away from trading in the middle. And definitely once we got all this congestion, stay away from this congestion. But we have this trend working up higher, this bullish trend. We have a break, new high, another one leg to new high. Once again, all the people that are holding long position, they need to sell. And when they're selling, they need another side of their order, so they need buy orders. And all the people who went short here, they have stop loss as buy orders. So if you just push their stop loss just a little bit, you will trigger all their buy orders. They will sell and it will rally the market up lower, and he will not lose. He will be not making his prices lower, the average price lower and lower. He will take all of his profit somewhere around here. And you can see why this is working. You can see how effective this trap was, because you can see how everybody's panicking right now and they're throwing their towel in. So failed break higher, and here was a first entry long, second entry long that failed. This is your safer entry, but a lot of times you will not even get a lower high like this. You will just go straight lower in these good failed breakouts. So this is why I took this trade, but definitely good trade here. All right, so I'm resuming the video, and oof, it was quick. I'm entering a trade right here. What I'm looking at is, I just eyeballed this trend line and looks like valid, because you can see the first 2 swings right here. You can see we confirmed the trend line right here. So we got 3 touches of the trend line, and we made this 1 push higher and confirmed trend line once again. So we got the trend line right here and we're coming off the tops. But more importantly, we have a new low right here, pull back, first entry, pull back, second entry short according to our rules. We pushed higher, ticked 1 tick higher, instantly reversed down. There's a big bearish selling momentum happening at the very close of the bar. We turned down very quickly and very abruptly. This is what I want to see, a lot of selling momentum happening. It is a second entry short, it is off the trend line, and it is still at the highs. So this is what I like to do. So our market structure, our bias is in our favor, because we should be coming here to this support now, because the trading range, this is what trading range do. Look at this, up and down, up and down. So we came from the highs, we're now going from the lows, and you can see we're quite making it. Just a few more ticks. So I'm resuming the video, and the trade is taking up quite some time. We are still in the middle of my trade. We made a little bit push higher, we turned down. So I really think we may spike up lower now with this one more trap, but it's not taking as quickly. I was expecting the spike down quickly like this. Nevertheless, I still like the trade. Second entry short off the trend line according to our rules, and we're coming off the top. We're most likely going here. Come on. Come on, a few more ticks. Once again, normally I'm holding a runner. I'm scalping through. I'm scaling out with 3 contracts and holding 1 as a runner, because you never know what's gonna happen, and you want to keep that 1 position open in case the market does unexpected tremendous thing that you want to be a part of. So, but you know, the day like this, very slow looking, like I'm only scalping, and I think, you know, $500 per trade is fairly decent, so I'm not complaining. And we out, perfect. And you can see this was a first entry long, pullback, second entry long, they failed now. We added a few more, you know, fuel to the fire, so I like this. And you can see this is the much safer way of trading ranges than this. You know, this is really, you know, not the right idea, not the right way to trade ranges. This is much better. From the highs, fill break higher, off the trend line at the highs, and the second entry is right here. So since I had one loser here, I'm going to be looking for one more trade, 2-1 for now. Hopefully the next trade will come soon, so bye for now. And you can see there was one more push off the trend line, but unfortunately it was just a first entry. You can see new low right here, pullback, first entry. So, you know, that is not the high probability setup according to our rules, so I skipped this. Nevertheless, it worked, but I like to wait for second entries. I like the highest probability setup as possible. It is at the key entry point though, so very tempting, but and the current bias is down now, but still I like the second entries. All right, and we can see that we actually made it all the way down to the support, which is what usually happens on trading ranges. On a good trading range, you will go up and down, up and down. There was a good setup right here that I didn't take. I didn't pay that much attention to it because, you know, for you guys, as I'm constantly stopping and resuming, it seems like it happened quickly, but you know, it's been a long time since my first trade and I'm doing other things while I'm trading, so I forgot to take this trade. It is a first entry short, pullback, second entry short off the key entry point in a downtrend, so this is a good trade to take. Unfortunately, I missed this one. Then we bounced at the support. Once again, look at this, fell, break lower. We ticked, few ticks lower and rallied up instantly higher. Same thing happening right here. So this is why 9 out of 10 times those trading ranges will fail. And now we have this bullish correction working up higher. But overall trend is still down, I believe. I still am looking for some sort of setup to make a new low right here. So I'm not tempting to buy this, even though this is a quite strong move. I don't want to get too, you know, caught up in this, because the overall, this downtrend is looking definitely valid. We're bouncing off the trend line almost every single time. The EMA is pointing down. So we'll see. We may rocket up higher and I'm completely wrong. Anything can happen. All right, and I'm gonna place my order right here. Hopefully I get filled in time. Happened fairly quickly. All right, we're in. And what I'm looking at is we have a new high right here, first entry long, pullback, second entry long that failed, big bearish reversal bar. But more importantly, I'm looking for a new low of this downtrend. This is what price action trendline rules are telling me, that after a break, there's going to be most likely a new low. But you may be wondering why I'm not waiting for a new high of this trendline working higher right now. Well, we have a first attempt to make a new high, we didn't. And there should be second attempt happening at the EMA. But notice how we push through the EMA like the EMA is not even there. We completely ignore the EMA. Excuse me. And the second entry long happened way below the EMA and way too down. This is now way too late to be finding longs. So the bearish momentum is very strong. We pushed through the EMA, and now that we're going long below the EMA, that is very weak sign for the bulls. So the bears are very strong here. And it is a failed second entry long, and I'm looking to go short here. I'm looking to make a new low of this downtrend working lower. So let's see how this goes. But yeah, hopefully you now understand why am I taking this short, and because normally you are correct. Normally you want to wait for this correction to play out, but we did. I tried to wait. We have a first entry to go long here, it failed, And since the second entry didn't happen at the EMA is supposed to be holding prices. If there's a lot of bulls in the market, EMA is supposed to be holding prices, or we are supposed to go long off the EMA, but we didn't. We ignored the EMA because the overall pattern is stronger and more people are looking to sell. We pushed the EMA, second entry long that failed, big bearish reversal bar, waiting for a new low of this trend working up lower. Alright, we're starting to pick up some momentum. Let's go. I believe 3 more ticks to go. Alright, we bounced on my exit order. Once again, it's not enough just to bounce. A lot of times it is enough when you're first in the queue, but most of the time you will need a 1 more tick to push through your limit order so you can actually get filled correctly. I don't like to see this. These trades are the ones that will get you emotionally riled up, because when you touch your order and you go in the opposite direction, you bounce off of it, and God forbid it's a loser, then this will really get you. But we're still quite early into this trade, and we closed quite bearish, so I hope, I mean, I don't want to hope, but I think we may get a few more push lower, because this was such a big move through the EMA. You cannot ignore this, and the downtrend now is in play, and we still have quite a way to go to this support, so we'll see. All right, we're still in the trade, and you can see the trade is stalling out. I'm gonna ride this one through, because since we already touched, I don't want to, admit that I'm wrong. Yeah, I'm gonna be stubborn like that, but I still believe there's failed second entry short, failed second entry long, in and downtrend. We pushed through the EMA, multiple signs to go lower. So, but right now we are not going anywhere much. So I'm gonna pause the video, let you guys know. All right, so the trade is taking even more time than I expected. I actually got up and went and do some other stuff, so I'm quite glad that the trade didn't end, because I wouldn't record it. But you can see we're still inside of this little mess, and we're starting to go up and down, up and down. We're starting to go a little bit sideways. Nevertheless, I'm still gonna let my order play in, because I don't want to monkey with the trades. So I'll pause the video and I'll resume it when we are near one or the other. All right, and it looks like we're getting closer to my order. The trade is extremely long. If I hadn't been recording, I would have probably already got out of this, but I want you to guys see how this trade is gonna end up, because I still believe that the setup is good, and I still think we just need to trap a few more bulls. All right, come on, let's go. It looks, and we out. Oof, dude, what a long ass trade. Took over an hour. So hopefully you guys, hopefully if you guys made it to this very end of the video, thank you for watching. Hit the like button and subscribe for more videos if you enjoy these. But yeah, you can see the trade ended up working, because it is a good setup and very high probability setup. It just, for whatever reason, it ended up taking such a long time. But you can see, just to recap, loser right here, winner right here, winner right here, and the last winner right here. So 3-1 for the day, not too bad. I'm gonna close the shop and see you guys in the next one. Bye guys.